I'm gonna let Don brag about being a bottom buyer for a minute.
I was literally going to say we're here for the victory lap episode, which will be the Pico top.
Yeah. I mean, if you look at Bitcoin, it hasn't actually moved yet. So I don't want to be like too victory lappy because I mean, at the end of the day, it's just up 10% or so. But the other stuff is pretty nice, right? Like ETH, Solana, that kind of stuff makes me happy.
If you own any of those things.
I mean, honestly, like a lot of altcoins have done really well. ETC has outperformed. I mean, it always does when kind of the merge stuff comes up, and a bunch more. So I think there's going to be actually a lot to talk about this show. Finally,
which is amazing. The ETC thing, especially because I knew it in my head, but I didn't think like, oh yeah, don't forget to go buy this illiquid piece of crap that has a stupid narrative about proof of work rolling over to it, all that kind of stuff. And I just didn't even consider the trade, and then you see a Hisaka tweet that's like, you're welcome, or like along these lines, or just posting Barry portfolio or profile pictures over and over again. And I'm like, dadgummit.
Yeah, I should have thought of that.
The obvious right and left brain play that I just completely disregarded.
It's the same with Lido, or however you pronounce it. Yeah, it was pretty obvious play as well. But then again, like that's the thing. Price goes up and you have a narrative instantly. There's actually something I tweeted about like a couple of days ago before ETH moved. I was like, the moment this is gonna move, you're gonna have a narrative for it, right? And people are gonna jump from the macro sucks to whatever the new narrative is and explain the price movement by that, which is always funny to see. And I think that's pretty much what's happening.
Yeah,
always happens.
Well, let's roll the regular show.
Yep.
Thanks for all of you who were here for the pre-show of Don's Victory Lap.
More to come.
Always more to come on that. All right, 3, 2, 1. Hello, welcome to Weekly Open. I'm Brian here with Don and Cred. We'll get to them in a moment. First, I want to say thanks to our partners over at FTX. I can't manage these different windows here. Go to weeklyopen.com/FTX. Trade directly from one asset to another using the FTX app. You can still dollar cost in, dollar cost average out. Anything that you need to do on a recurring basis, you can do it through the FTX app nice and easily. We'll see if now's the time to average in or out. I'm not quite sure. We're up 40% off the bottom, so let's see what happens. But everything that you want to track, you can track it on the FTX app super easily. It's a great way to do so. Thanks to them. weeklyopen.com/FTX. Let's get to the show. Cred, you're on the left. How you doing?
Yeah, good. I'm really glad that Don got a bottom, but I'm not here to talk about his girlfriend. I'm sure we want to talk about markets.
Oh, wow.
Wow, dude. How long did you prepare this one for?
Instant. You know me. I never pre-prepare my stuff. It's all reactive. Yeah, I'm doing pretty well. It's an absolute scorcher here in the UK, temperature-wise. People out here dying. There's no air conditioning in most houses. That's how you know that the weather normally doesn't get like this. Thankfully, this place has one. So I'm grooving and enjoying Don's Twitter victory lap, sort of schizophrenic, manic posting.
Don, did you really go on a first date by jumping out of an airplane together?
Yes, I did.
And now she's your girlfriend.
Yes.
This
first date
between
ever.
this and buying the bottom, like all of crypto Twitter is going to be just in full cope mode about you. Girlfriend, bottom buyer. Come on, this isn't supposed to happen.
Unbelievable, right?
I mean, someone had to save the market, right?
Yeah, but both at the same time. Wow, it's pretty impressive.
Well,
I love how it's at like 22K and we're like, Don, you're the best trader in the world. You know, like it shows how one-sided and brutal this trend has been. Like if you zoom out and any type of high time frame stuff, it still looks totally pukey. And you know, it's the first visible bounce since literally the top. And we're all here like, you know, in pure jubilation. It says something about the state of the market, doesn't it?
Yeah, the 1% meme guy is very, very real. I guess on that front, like how bullish are we? So far, alts are outperforming Bitcoin pretty broadly. And that's probably my biggest concern. In terms of what's better, it's like the best performers are definitely the things with some kind of narrative, as you touched on in the pre-show, Don. Do you think this is the type of thing where we're just going up a little bit because going down at this point is harder? or is it something that could be sustained?
I think it's going to be sustained for a while. With regards to the altcoins going up harder than Bitcoin, I think it's just because they went down so much. They went down so much, in fact, that like a lot of them bounced 50, 60, 70%, and you can barely see it on the chart still. Even worse than Bitcoin here. So it's just kind of like it was super illiquid on the move down, and then people stopped selling, and you just get like a 60% mean reversion. And I think that's probably going to stop at some point, like for at least the altcoins that don't have a narrative. And then you're going to, like, if Bitcoin wants to move up at all, you're going to have like a Bitcoin move that kind of leads everything and not the other way around. But right now, I just think people are just repositioning for stuff after pretty much everything blew up, and that's where like the recent kind of 50% moves on the altcoins come from.
And that's the 50% moves are really on like the bigger layer one things. If you go kind of down the list, there's a good number of things that have already gone 100% or more off their Pico bottoms, but some even off the like consolidations that they had after the bottom. So if you're like, oh, I think that was capitulation, then you get in, they're still like kind of in that kind of 100% range off of where they settled, like, or like where you would have had a reasonable amount of time to actually fill.
Yeah, I mean, it's kind of crazy. Whenever you get these like 90% move downs, you can do so much because you have so much room, right? Even for Bitcoin here, and I've talked about this a couple of times now. I mean, just based on how brutal this move was, even if it's bearish, you can have like a big move to the upside without breaking any of that, right? I mean, if Bitcoin went to 30K, still be bearish, and then you have these altcoins, and a lot of them could actually 5x and still be bearish. So whenever you have those kind of situations, and you get like a little bit like the market starts to smell like a little bit of a reversion, people just jump in. Because the risk to reward is just really good, right? When everything's down so much, you have like resistance far away, and you just need a little bit more money to push it up. I mean, that's good conditions for like these kind of mean reversion plays.
Yeah, 5x and still be bearish is hilarious.
Exactly right. I mean, the market got crushed so hard that focusing purely on percentage terms like isn't hugely helpful. It can be a distraction because these things can go up a lot, but still structurally be in a downtrend and look terrible. And even if they go up multiples into resistance, you kind of have to treat it as a bear market rally until proven otherwise. Because like the alternative would be going to like 10, 14K, whatever it is, apocalypse levels with zero bounce. You know, if you get a bounce in the interim, that in itself isn't new trend forming necessarily. You still have to be like on guard. Like 2018 was a great example. Some of the counter trend bounces we had were terrifying and like almost made new all-time highs, right? Like from 10 to 16K. There was some really brutal stuff, but like higher time frame market structure still stayed intact, you know? And I think that's probably going to be one of the better guides for what to do with this bounce and what it means, etc. Like either taking it level to level, which is fine, or just keeping abreast of higher time frame market structure, and you know, being cognizant that there is a lot of space to where the market can go up and it would still suck structurally speaking, which is a bit of a downer type of point to make, but that doesn't mean there isn't, you know, there aren't huge volume gaps to fill in the interim.
Yeah, I mean, looking at this weekly candle, we're below the 200-week moving average, which we've talked about kind of ad nauseum. But also, we're on the 5th week post what a lot of people called not a capitulation candle, but looks a bit like one now. And we're not even really a third of the way up that candle body. Like we are if you go like wick to wick on it, but maybe we're at a 50% retrace of that capitulation candle after 5 weeks. So it's not like a recovery that's just so incredible from a Bitcoin perspective that you just can't ignore it. But the market, the unwillingness to go down further is definitely presenting itself in the market. One other thing, like if you're just looking at hey, I'm going to draw a bear flag and see if it's a bear flag, and it's a bear flag, you know, like this is basically picture perfect if you're trying to do that type of thing as well. So again, I don't think any of us are trying to set this like up only turbo bottom, never going down again type of mindset. But there was definitely a trade here that, Don, you were super early to, and then now a good number of people have caught wind of it, and we're trying to determine, does this have legs, and what assets could it have legs in? Like, will it be Bitcoin going further, or will it be continuation in altcoins? etc. Chat's saying I look tired. I am tired. I'm only on my second cup of coffee, and
I'm a real American hero.
Yeah, and I'm not wearing a hat today, so it's got this bedhead thing on.
Ledger, what do you think of the divergence to some extent, at least on the weekly time frame, when it comes to the 200-week moving average? Right, as much as we've memed about it, ETH had a fairly clear breakout and kind of engulfing weekly through its mini consolidation and through that structure as well, whereas BTC was kind of just flat and seems to be at the top of the range right now. That's kind of tricky. Like, if you wanted to steel man the case for caution, it would be something along the lines of weekend altcoin plus narrative led rally with Bitcoin only getting to the top of the range and not kind of catching up yet. It'd be something along those lines. Do you care at all about this structural weekly divergence between ETH and BTC when it comes to the weekly time frame? Because I'm kind of still churning through it in my head.
I think it could still be a little harder than people anticipate. I already saw somebody talking about how leverage was re-entering the system pretty rapidly with Ethereum. Essentially anticipating the merge. If the merge was not it feels like the merge is real this time. That's dangerous to say, but
famous last words, yeah.
But there's a lot of good reason to believe, and including it's happened on multiple test nets and that kind of stuff, that the merge in September is a thing. If that was not the case, I'd be pretty worried, because it would look like one of those things where the real indicator is just sitting there at resistance and the other stuff is kind of blowing past it. And on the rejection by Bitcoin, you'd be tempted to buy this retest of it on ETH or something. You may still get that, but if we're really, really bullish, we'll see a Bitcoin reclaim and retest. So essentially 22, 23 should become support if we're going to go and hit 30K or something. And I think actually 30K is a pretty good bear market target for Bitcoin for a retest, a test for continued downside. This should be, and Don, I'm sure, has this on all his charts. To me, this should be really strong resistance for Bitcoin. So I can't imagine ETH going further with a narrative as a tailwind. I can imagine 2,500 plus, and people are struggling to deal with what that means. And on the same pair, it didn't really get down to where we all talked about it could go, like the 0.044-ish, 0.04, all that region. And it looks more like it might be one of those kind of back to the normal range type of thing. It just makes it really, really hard to trade. But it doesn't get me super concerned, because there's a narrative to TLDR me rambling. Mm-hmm. If there was no narrative and it was just a reflexive bounce because it's less liquid, I would be much more worried.
Yeah, ETH actually looks really, really good to me. I mean, do you want to talk about ETH first or Bitcoin first?
Which P&L is greater for you?
ETH, definitely.
Okay, let's talk about ETH.
Okay, so I mean, with ETH, right? A lot of my bullishness is actually coming from the ETH BTC pair, because I love these kind of trades where you have, technically speaking, we had this range here, right? 2018 range. That's what we've been ranging in for most of this year, right? And or pretty much for all of this year and a little bit of last year. And what basically happened was that we broke it down, and we talked about this on the show, where we broke it down but didn't really have any follow through. And that opens up the possibility of a false range breakdown, right? So we've had the same thing here, where the range where price tried to break the range to the upside, could manage to, and then just fell all the way back down. And we're now in the same exact situation, just on the other side of the range. And that makes me think we're going to go back to the high of the range, which
and you have to admit, the Kobe dream of 2K, 20K is the most real it's ever been right now.
Yes.
The path to that is so clear.
Don, do you have resistance here then on the BTC? What does that tell you in terms of USD, if anything?
I do have resistance here, but I don't think it's too meaningful. I think it's something where we could get a week of pullback or something, but I don't think it should lead to much more, given that the much stronger signal is just this false breakdown, right? We've seen false breakdowns or false like breakouts, top and bottom markets for the last few years on Bitcoin and ETH and a bunch of altcoins. I mean, the most prominent one is just the all-time high of Bitcoin, right? Where we took it out, took the entire range out, and then just completely dumped afterwards. So I'm not underestimating these kind of signals. And given that we have pretty good monthly support on ETH USD as well, it just makes me think that both ETH BTC and ETH USD should go up. They've already gone up quite a bit. I mean, ETH USD, if that goes up a little bit more, it's actually going to be like a double from the bottom, which is kind of insane, right? People are like, yeah, this is just a bear market rally. But if you get like a 2x or 3x in a very liquid market like ETH in like a month or 2 or 3, that like blow everyone away that kind of has been trying to make some money in markets. But in crypto, it's just like, oh yeah, it's a bear market rally, didn't really need to catch it. Like these are big moves, right? Especially given with how much size you can enter them. It's pretty easy to buy as much ETH as you want, in my opinion anyway. I mean, it's just how it is. And then
our size is not size, so yeah.
Don is here like, sell all you want and fuck off.
But yeah, so for me, kind of like the next resistance is too far away for me to be concerned right now. I'm just happily chilling in my ETH position. You see that there's monthly resistance at 2 point something K, 2.4-ish, which roughly aligns with what Ledger said. And I mean, there is weekly resistance at 1.8K, which I think is also significant. But beyond that, we're currently trading above the all-time high again, undershot that on the USD pair, right? So went quite a bit lower and reclaimed it, which I think is a good sign. So for me, like everything looks good on the ETH front. More than happy to keep holding it. And one of the advices I've been seeing on Twitter left and right is don't round trip your stuff, right? Like close your positions early. But the thing is, if you had that mindset throughout like the history, you'd be much poorer than everyone else that just had a little bit of faith, because you just have to look at these price movements that we've had and at the trend, and it's pretty clearly up. So like whenever I see big opportunities like we've had the last few weeks, I'm just willing to hold it a little bit longer. And if I end up round tripping it, it's not the biggest deal in the world. I'll just try somewhere else, because ultimately I think it's going to go up. So I might as well have a little bit of faith in my positions and let them actually play out.
Yeah. I ran into this on this attempt to get a bounce. I've run it into it like twice. Like playing different altcoins or like trying to find a bottom and then round tripping it. So it does punish you in the sense that by the time it does happen, you're probably in your most conservative state yet, because you got hit by it in the wrong way multiple times, you know? So it doesn't make it easy until you look at hindsight and it's like, oh, you didn't buy the all-time high retest from the prior cycle and the forever bottom and before everything 10x and ETH merged. You know? Like, always easy in that hindsight method.
I think you're right. You have to pick your spots, right? Because those types of trades affect your mental capital as well as your actual capital. So that's kind of, I think, explains why, you know, the phenomenon you've explained there, which is why you end up at your most conservative, because you keep taking these like licks, cuts, and haircuts. If you're doing business in the middle of nowhere, by the time it gets to the place where you should have been waiting for and should be doing business, you've got like nothing left to give mentally, and your capital base is down, makes your risk much more conservative and whatnot, and it's tricky. So that's where the whole patience memes comes into play. And as we discussed ad nauseam again, there are only so many spots on these charts where it's worth punting with conviction, and it's a very short list. But anything outside of that list probably isn't worth your attention as far as these things go. And yeah, prior all-time high retest like 20K, 1K, etc. Like, you know, we talked a fair bit about those levels.
Cred, did you want to add anything from a like general price action, where things are, where you think they could be?
No, not a whole lot. I mean, I can screen share very briefly. One sec. Chrome tab, not that one. That'll get me arrested. There we go. Okay. We talked at length about mean reversion, right? And also the fact that the market's so wrecked the even conservative mean reversion can take you to some pretty spicy prices. I think the weekly time frame can be some indication here. I pretty much agree that if this is going to be a visible, meaningful move, and at the moment it isn't, right? Like this isn't a visible, meaningful move, especially if you compare it to like what's happened in the past with bear market rallies.
Guy.
1% meme guy literally feels that way. Like if you look at counter trend moves in general in crypto, the reason they're hard is because they're compelling, you know. And I think for this to start to look compelling, I think 30K-ish is a very good area as far as moving from one big level. If the trade is going to be worth anything, you have to expect it to go at least to the next big level, right? Because otherwise, what's the point of trading the big level? Like you're not going to be buying generational, once in a lifetime, yada yada support if you just want 1 to 10% on it. Right, it needs to be a bit more meaty than that to make it worth trading. So I mean, structurally 30K is like a decent mean reversion spot, and if we get the moving average memes over it, as we've discussed at length, there's like a lot of confluence at the 30 plus type of structure. I mean, and that's from just a moving average whatever point of view. From a weekly market structure point of view, anything that doesn't violate the higher high all the way at 46, which sounds absurd to say, that's still kind of lower high territory, right? So even if we take like a meme fib for no reason whatsoever, and you know, set that thing up as you would to measure the retracement, the whole 618 whatever type of move, 60 to 77 retracement, which is often used as a standard flag bearer for counter trend moves, all of that seems to align at 30K plus, which is to say that the market can go from 18K to 30K plus and still be structurally a bearish piece of shit, you know. And macro can still suck while that happens.
So many people would be in like tough shape in that
agony, mate. Complete agony, you know. But I think you have to be open-minded towards it because we've seen this in the past. And I think Don made a very good point about being the type of dog that just chases narratives once price moves one way or another. So crypto goes down, oh, it's macro. Crypto goes up, oh, it's merge and spot bid, whatever. Like if you're taking a trade, basing it on a narrative that you've only decided is important after price has moved, that's very likely a terrible trade. You know, or at least your timing is far less than ideal. So I think some humility is important when it comes to like crypto market structure here. It can go to 30 plus and still be just as bearish as it was at mid 20s. I know that statement on its own sounds absurd, but I think from a whatever structural point of view, it's supported. And as far as ETH goes, very similar thoughts there. The level which was important before this whole breakdown, unwound, etc., was I think this prior swing high cluster at 1800 to 2K or thereabouts, right? Like previous range high, it was this really bouncy summer range low, last little bit of support before the acceleration took place. So moving into that would still be a kind of bearish rally, bearish retest, whatever you want to call it, or at least on a relative risk reward point of view, that's not where you open up fresh positioning, you know. And you can take some liberties. I think Don, when we were in this area, had this as the range low as well, this kind of swing low candle from before the acceleration. Like all of that is equally valid, you know. And if we start adding our moving average sandwiches on top of it, you can kind of see any pushes into 2K on a relative basis as far as where the market is, that's still an area of resistance and just as likely areas for reversal before less pleasant conditions. But that said, there's like a fair bit of space there, you know.
I like for when you put the moving averages on, you also have them in these like clownish colors, you know.
Yes, it's to remind me not to take them seriously. Yeah, for sure. yeah. But I think that's just setting some context for how. I mean, the only reason these moving averages and support levels are so far away is because of just how hard the market got wrecked on the way down, you know. And that's where a lot of the space comes from. It's like there's the only reason this bear market, you know, these sorts of counter trend moves could potentially go so high is because we went so low in the first place, you know.
Meanwhile, another thing I've noticed is that many people, prior bear market survivors, have been like, I think Degen Spartan was one of these that said this. It was basically like easiest bear market ever, something like, and I think there's a survivorship bias there that's inherent because they knew better how to navigate this time because they've survived a previous time. And I think if you actually look at the market, it's pretty much just as bad this time as it has been on priors. The open question is like, what other influences are there on the market now that could actually make it much harder, much worse if the macro, if you will, if all that stuff continues to look like crap, you know, like if we're in a recession, will it become an even harder bear market? But I think in the like crypto is its own little microcosm within a broader bull market, this was already pretty much as difficult as many prior bears.
I think actually, like, it depends on your perspective, really, because let's say you kind of a new entrant to the market and you were bearish, so you kind of just lent your stuff out to kind of collect yield, and then you lost 99% of your balance by being exposed to Luna. Like, there were so many traps this time around that even if you wanted to be careful, you just get blown up, right? Because like in 2017, 2018, that bear market, I had my money, like almost all of it in Tether, and I had like this somewhat like naive trust that it would just not go belly up. And nowadays, like, I have much stronger of a belief that, okay, that's not gonna happen. It's not gonna blow up. But back then I was just like, okay, if it goes, I'm kind of screwed. And I could have been the guy that lost it all in the Luna scenario if I joined this bear market, right? And I think it's so easy to lose sight of that because,
or not just Luna, or
Celsius
and Voyager,
Celsius, or everything. Like, there's so many ways to get blown up.
I think it's a really good point.
Around.
One way to summarize that would be the definition of survive is broader this time around because the extent of contagion and the types of parties affected by that. So when people talked about survive in previous markets, it was basically survive your shitty ICO token going to zero and still having some money left. You know, the term survival was very closely anchored to price. Whereas now survival is also closely anchored to like choosing the right counterparties, who you're lending money to, is your size, like all that type of stuff.
I think that was also true like 2013 cycle, but with exchanges, you know, like the fly-by-night exchanges, and there also weren't very many like good exchanges. Whereas the 2017 crowd, we got a lot more. We were more fortunate because the blowups weren't near as big. It was like Cryptopia, but you also had 10 reputable exchanges where you could have kept your money. You know, it was more of like, do you have altcoins that can't trade anywhere else? And so like your mothership was lost, but your mothership was going to zero anyway. You know what I mean?
I don't know, bro. I'm a digital resident. I feel pretty good about myself, you know?
So there was that kind of stuff that failed systematically in 2017, but like somebody that just wanted to participate in the market, if you were on FTX and Coinbase and Kraken and Binance, whatever, like, your coins were fine. Like, there were places to leave them even without, you know, your own wallets and stuff where you were fine. This time there was plenty of ways to die otherwise.
Even if you're being risk off, you know, like you're technically you're just holding your coins and not speculating on leverage, earning some yield. You feel good about that.
But the other thing is everything that got a broad public narrative got just as wrecked as all the stuff last time. Is this, you just didn't think it was the next big thing this time like you thought last time. Like, you know, in 2017, you thought whatever coin was the future, and you bag held it minus 99%, and you didn't bag hold them this time. Like, you didn't bag hold Steppen and, you know, Safe Moon, and like, but they still those existed, and that's where retail was playing, and they still lost 99% or whatever. So I think the survivorship bias is pretty strong in people that are saying that. The question is now, you know, now what? Can you just buy that level, assume it's a 4-year cycle, assume we're going to have another year or something of sideways chop before we moon and make everyone cope again and go to a $10 trillion asset, blah, blah, blah. Don't freaking know. I have no idea.
My gut feeling is that not enough time has passed for a fresh uptrend. I could totally entertain the idea of a higher price-based range and whatnot, or price even revisiting this type of bottom or this consolidation we're breaking out of and spend more time there. I think, or if the economy goes to total shit and, you know, the soft landing fails and it's a proper recession thing, I think that would definitely spill over. What I'm less comfortable with is just purely from a time-based point of view, for this type of move to resolve in like a new uptrend, you know, especially like a one where retail participates and all the normal signs of frothy speculative type of cycle. I think time more than price is my only reservation there, at least at the moment.
Yeah, that makes a lot of sense too.
For me,
go ahead.
Sorry. For me, it's kind of like when I'm looking at the Bitcoin market, and the reason why we've been talking about 30K so much, at least I have, is because I think that's pretty likely to happen. More likely to me to happen than like 12 or 14K, which a lot of people seem to be targeting. And I think in general, that isn't going to be the end of the bear market. I think we should be ranging around that level or that area for quite a while, even if the bottom's already in, still going to be painful around that level, in my view. Could be completely wrong. That's just kind of how I'm positioned. So with regards to like, is there gonna be like a straight up new uptrend from this? I don't necessarily think so. I think honestly, like the most conservative part of me is comparing this to 6K. As in 2018, we went from 20K all the way to 6K and then bounced all the way up to 12K, only to go back to 6K a billion times more and then actually fall through. And I could honestly see the same thing happen again, where we're kind of like doubling from 17K, which was the low, towards like 34, and then come back to 17, 18K, bounce a little bit lower that time, do it again. And then I don't know if we're going to like break the bottom more this time around, but like that kind of scenario wouldn't surprise me one bit. So I'm like not the perma bull. I've never been the perma bull. I just think in general, whenever you have these kind of, when you have so many people off sites and so many people convinced something's going to happen, it's usually not. And that's kind of what I've been positioning myself for.
I'm trying to scribble your thoughts here.
Yeah, exactly.
Yeah, I mean, I think any of that's possible. Even if you take, this is the like really painful scenario, but even if you take this kind of modest scenario of let's get back over that 200-week, kind of back into that we don't know type of range, you can spend 6 months in these price ranges that are 50% off the lows and 50% below the highs for half a year, and it wouldn't look surprising on a chart or anything. And I always like to see like, what does it look like in a chart basis? Would it surprise me to see this chart in 6 months or a year from now? I think there's very little that I could draw that would be stunning to me currently. And it just looks like it wants to go sideways after that much time. Like that's a lot of weeks of down, you know? So a lot of weeks of uncertainty and sideways after that would make a ton of sense. I was trying to hint into this when I was talking about the, broader market. We've looked at the Dixie a ton. Once again, it's looking like it might be wanting to top. This was pure parabolic. I have multiple parabolas that I've tried to draw on this. That's the problem with parabolas. They're not very easy to just to make perfect. But
I don't know, mate. Ask Trav. He had a pretty decent time doing it.
So this is just weekly touch points. Like it was just turbo mooning and seemed kind of destined to break. So what I did on this daily chart was basically just try to put multiple channels together, kind of see what shakes. And it just really looks to me like this chart wants to calm down. And obviously there's a lot of big things at play here. Much harder to just, draw trend lines and stuff on the dollar and everything that's going on in the world. But, technical analysis exists across all markets for a reason, because historically it's reasonable tell. And this just hints at in my mind, at wanting really desperately to calm down. And nothing, it could be a scenario where very little changes again over the course of a year. This is still like really, really elevated and high and has a really strong relative strength. But like, you guys don't have to necessarily think about, is the euro up or down another like 5% for my life this week versus last week. Those types of changes are the ones that I think are a bit obscene when you have, for the most part, like similar cultures and buying power and economies, and all that kind of stuff. For your buying power to be changing, 3 to 5% a week doesn't really make a lot of sense on a continuous trend basis when the economies are relatively similar. And it seems like those are probably going to be short-lived outcomes, and then it's going to be back to like much slower trending moves. So I think it's not unreasonable to think this has some kind of temporary top in it at a minimum, even if it's going to go higher in the long run. Do you have any thoughts on there?
I just think you're right in that it doesn't take much cooling off to form enough for a crypto to mean revert, even in an unfantastic or crazy way. And dollar cooling off, commodities cooling off, the market becoming more sensitive to Fed speak and hike expectations, etc. Like even a 1 to 2 month period where it's not just headline inflation Armageddon, that could be enough for just a bit of a march up, even if it doesn't end up being trend forming. And I guess that's still my base case, that whatever price action we see now to the upside, I think I'm far less likely to interpret it as trend forming, more so than mean reverting, purely as a product of time more than anything else, And that's kind of, I think in general, like if you look at the ETH chart on my screen, this is like important, right? That the price action we have right now is important because it's the first meaningful sort of higher time frame. I'm insulting Don here because it's a daily time frame, but higher time frame sort of market structure shift that we've had in a while in the form of this range high breakout. And again, the 200-week moving average was perfectly in line in confluence there. This is like a notable shift in behavior. And you know, even if I'm not a kind of in general a breakout buyer in a counter trend type of environment, I still think my general approach to this is don't fade the breakout until the break fails, or it reaches like its target or very attractive levels of resistance, right? So this, to me, just looking at the chart, is no man's land, right? Even if you completely eyeball it, to me, two areas stand out. On the first one, in terms of don't fade the breakout until the break fails, I think it couldn't be clearer what that would look like, which in this case would be any closes and weakness sort of back below the breakout signal that was generated. And then that starts to look pretty terrible, right? Because this whole leg just looks like a sort of big old mean reversion from bottom to top. Comes down to what should be support, it fails, and that's a really rough-looking chart and kind of bear market pattern. And the alternative, the second area to do business, would have to be higher. Sort of once the Don-esque mean reversion targets start being reached, you know, as the market reaches this previous consolidation before the breakdown, once it reaches structure to the upside, I think that it also makes sense to act there. But immediately after the breakout, especially when it's the first one after a meaningful shift in, the first meaningful market structure shift in some time, I didn't find this specific area in ETHUSD terribly compelling from like a decision-making point of view. You know, I think you're going to get clearer signals where there are candles. This just looks like a big gap to me. I'd rather do business with some conviction if the breakout fails, and that would look absolutely awful, or when it gets to somewhere where I think there'll be some profit taking and people like Don nuke the market to secure their P&L and infinite joyous trips with his new girlfriend, you know?
Can I show one more doom scribble?
Yes, we love the doom scribbles.
Okay. So this is a doom scribble of, once again, like very nasty long-term chart, like retracing years full. This is what I would call kind of your recessionary environment, right? But this chart looks no worse if it goes up significantly between now and the spring. And all it's a hint of is that, okay, yes, you can have a plus 15% mean version after a minus 25% downside in the stock market. And, you know, that's only another 10% to the upside from where it is right now. And it just looks like a monthly bearish retest, really. And that still gives plenty of wiggle room for, you know, bears and whatnot to be proven right in the course of time if there's a full recession and all that kind of stuff, and yet still be liquidated because they were still bearish after the first 25%. And on the mean reversion got, you know, lost everything because they kept getting more and more short. And I just don't think, even in a strong bear market, it makes it so easy to stay bearish and keep shorting and keep making money the whole way down on the downside. And right now, like the I don't know if y'all have seen some of this, but the global speculator shorts are like at all-time highs. And there's a bunch of other stuff like that. While the dollar looks like it's breaking a parabola, like this just looks like it's setting up for a multi-month squeeze up to me.
Mm-hmm. I agree. I mean, I don't necessarily know where the S&P is gonna go after it's bounced from the support that we are at right now, but I think there's a pretty clear way for it to go all the way to 4.3K, right? So pretty much same area that you have, round out there, maybe go sideways here, right? Maybe that's all the bear market is, like just it going sideways there. Maybe it goes all the way back down again. I have no idea, but I mean, it's at the first significant higher time frame support level, and yeah, there's a bunch of people in all markets, really. It's not only crypto, in all markets that are hilariously bearish, that can easily get squeezed out without changing the macro picture. And the only reason I think we all, like all three of us, keep on repeating that is because the macro picture is shit, right? But for some reason, people keep talking about the macro as if there's no way that the market can move like 5% to the upside while the macro is in place. And I think we're all on the same page there, that's just ridiculous. We've had the most brutal bear markets, and you still get 20 25% moves to the upside. I mean, if you look at Luna, for example, right? Is there even still a chart of Luna, the first version of Luna?
Here we go.
I think I might still have one somewhere. But
that'd be good, yeah. Because I think these are all the new ones.
Yeah, it's Luna BUSD, I believe, is the only way to get it.
Okay. Yeah. So you look. No.
You have to zoom in.
Let me see. Yeah, it's not. Oh yeah, actually, no, it's not.
Okay. It's like they replaced it as well.
Yeah, that sucks. But there was like, if you looked at the Luna chart, right, it went down 99% and down 99% again and then down 99%. And it went down pretty much 99% over and over and over again. And then you zoomed into the bounces, and there were like 200% bounces in between, right?
Oh, it bounced. I think it bounced 10x or like every day that on its way down.
Yeah, and you're like, what the fuck? And that's just, but that's how markets work, right? If they go down a shitload, they can go up a shitload without actually changing direction at all. And there was this news article that Cred actually put on the show that we have together at some point, where like a big firm got liquidated, shorting the Luna breakdown.
Yeah,
right?
I don't remember who that was, but I saw that too. It's unreal.
I think it was Upbit with their AI.
Yeah, it was an algo trader that was like, oh, I guess trend reverse. It's up 8x. We're
still better than Gainsey bot.
Yeah, but yeah, that's kind of like what I think is really important to kind of realize, that even if you have like strong views, don't kind of discount the counter trend rallies. They can happen no matter how bad everything is, and they usually do happen at some point. We haven't
like the price outcome of your views doesn't tie price to one specific way of getting there, right? I think that's the issue. People have this overarching thesis that because all this stuff sucks, price has to end up or bottom at a lower price. And even if you agree with them, it's a completely different claim to then say it has to go there in a straight line with zero mean reversion. I know exactly how it's going to get from point A to point B. That's a far trickier claim to make. And it's just in general, it's kind of absurd. And I've been... I talked to Don about this because basically most of the bounce arguments that are being made have been made around these prices is some version of price has gone down a lot very quickly. It's at a good level now. It might go up a bit, and that's not a shocking claim. That's not a grandiose claim. That's not the type of premise that should need sort of weeks of rambling and justification and whatever else. It's fairly straightforward on its face. And it doesn't mean that the economy doesn't start. It doesn't mean that the bottom is in forever. It doesn't mean any of those things. It's just kind of a relative
hard trade to make.
It's a very hard trade to make. Yeah, for sure.
Yeah. We're not even talking about the fact that, like, what if, for example, just a what if, we have not even considered what if it's a soft landing and we don't that's not even in our outcomes. We're talking about 36K or, probably lots of selling at 30K and the economy is absolutely going to roll over, et cetera. And this seems to be absolute consensus that the only outcome is full on deflationary style recession is what's really being talked about, because in an inflationary style recession, there will be assets that many stock markets go up in an inflationary recession, right? Because your currency is not what you want to own. You want to own assets. So different types of assets, but like you want to own assets. We're not really giving an outcome for that. We're only giving kind of this like strong dollar deflationary world outcome. And we're not, it's been a weird time, man. I feel like
it's wild. Yeah. Yeah.
We haven't had this type of thinking be required in basically a generation. And what happened, Ray Dalio talks about this in all his books. And it's basically like you give it a generation or two and everybody forgets how it, like what you had to do to survive in the last one. And it just makes it harder to do it again. But if you study the past, like you start to see some of these outcomes take shape. And there is a scenario where the economy is not good across the board and like fiat currencies are struggling, but in a relative pricing basis, it doesn't mean total doom for certain components of a stock market or maybe even the index or maybe certain types of assets, et cetera. So like there's a lot of variables and potential outcomes, but we're trying to squeeze all of them into the 2 recessions, 3, I guess, if you count, 2001, 2008, 2020, that were basically all deflationary style recessions within our generation. And the outcome this time does not have to meet those criteria. It can and probably will be very different.
Yeah, it's a recency bias, right? But I also think it's a product of a very strong trend. And I think that's the case because you see it in the uptrend as well. Like when you talk about dips in an uptrend, it's like, okay, well, maybe it'll go down 10%, but only to shake out the super leveraged people, and then we'll keep going up, right? So as your belief in the strength of the trend goes up, the amount of downside and negative scenarios you're willing to entertain is inversely correlated. That goes down. And it's the same in a downtrend. So even if you're like a hyper mega bull, because the downtrend's been so brutal, the best you can do is, oh, well, bearish retest, and maybe then we go to 0. But I think we might be able to go to 30K, you know? I think it's just a really strong trend beats that by virtue of recency bias and everything else, just beats that into you. So, you know, you're forced to be humble with counter trend views or expectations. I think we see it on both sides, you know?
Don, do you think that there's any chance that, you said maybe 20K is the 6K equivalent? If we're trying to put that 3AC gap is amazing. If we're trying to equate recency bias, do you think there's a case, and Cred, you've talked about this a lot too, is the 30K ends up being more like 6K, where on the way back up, it's like everybody's like, oh, I'm absolutely out of this market at 30K. Like there's no way I'm still in this market. So then it's like, all right, blew right past it. I mean, we didn't even spend a day there last night. Like, do y'all think that's a potential outcome as well?
Yeah, I think it's possible. I think it's not necessarily like super likely that we just blow through it. But I think, like you said, all of us, including myself, I don't think we give enough credit to the fact that this could just be the bottom and we could just keep going up. I talked about this a while ago, like when we like wiping out. I was like, it's so crazy, like that. I, as someone that doesn't think this is the bottom, just thinks it's mean reversion. That I'm like one of the most bullish people around, and I think there is a chance that this is like the bottom, and we're just gonna like walk up slowly and then actually just make new all-time highs. The narrative is gonna change to make that seem plausible the moment we get to 40 or 50K. Probably like it doesn't sound plausible at all right now. If the prices just like go a little bit higher, suddenly someone is gonna like put a name on why this is happening, and then everyone's just like, oh yeah, that makes sense. So yeah, I could see that happen. For me, it doesn't really change much in the sense that I'm gonna probably like just hold my position into like if we get an up move into 30K, and then decide based around the price action that we get on that level whether I want to be selling or not. I'm not gonna have any like AFK sells because I think there is a chance it's the bottom. So for me, it doesn't really change anything. I'm just gonna make up my mind basically once we get there. But yeah, the crazy part about all of this, right, is that I think there's a good chance that we wouldn't have gone to 17K if 3AC didn't blow up, right? So they kind of drove the market down much further than makes sense, right? Like they were forced to kind of sell, and a bunch of counterparties were forced to sell even though they didn't want to. That's like the most stupid kind of selling that you can have. If you're forced to sell, no matter the price, and you're forced to kind of take any liquidity you're given, you're going to do the most dumb selling imaginable, right? So people always say, okay, if this is the bottom, it's the most easy one. But the thing is, right, if it was sponsored by like these big guys, this like institutions, and like I said, Free Arrow Capital, kind of pushing the market way beyond where it should have been. And all of this down here could be considered just discounted, right? The market being way lower than it should be. And anything that you can kind of grab into like this liquidation of sorts. And we've seen this in other kind of crypto markets before, right? Where a big entity gets liquidated and everyone knows if we buy this liquidation, we're going to be able to sell it much higher just by arbitraging it out, basically. And this could be the same kind of situation where we're much lower than we should be. And it is an easy bottom in that sense because prices are much lower than they should be. So like you're kind of getting a discount. But yeah, like I said,
if that was true, would this be the most poetic like group of screenshots of all time? when Kyle said a couple more liquidations.
Yes. It would be, yeah.
And the ProShares short ETF as well, right? Also happened.
Yeah. Oh, the short ETF, the ETF publishing thing is another one. It's just you've got to be kidding me. Both of them. I was like, yeah. The futures. I made the same excuse as I did with the CME one. Like the new institutional products tops the market, Pico top, like that.
Right.
That long futures ETF is so unbelievably bad. Anyway.
Yeah.
I just had you talk about 3AC gap and then like Kyle's tweets.
That's a great chart annotation. I think to your point, Ledger, 30K is 6K. I think what made 6K act in that way, or at least one of the factors, and I'm beating a dead horse here, but it was time, is the fact that 3K was just so grindy, so illiquid, such an absence of volatility. It was so terrible that going up to 6K felt like God's gift to earth, like finally, because at that point when it's just moving sideways at 3K, you're almost making a 50-50 bet, because is the ask going to fall out of this thing again? Is it just consolidation before more continuation, or is it the bottom? So when it doubles and does so after spending a year doing nothing, that definitely shifts your expectations. So I think it depends when we get to 30K would sort of inform my judgment as to whether it's a valid analog to 6K. I think the more time passes and the more chop, churn, etc., the higher likelihood that it just blasts through, kind of bigger base, bigger expansion. If it just absolutely short squeezes, very illiquid 2-candle move to 30K, I think that would be less preferable. I think Don has spoken to that point as well.
Yeah.
It was about 18 weeks from the second week of capitulation over to where it kind of charged up above 4K again. But the actual, if you take that second capitulation candle to the retest of the 20-day was only about 12 weeks. So let's say between, 12 and 20 weeks, that would put us roughly in an October timeframe if we were still kind of in this 20K range. In terms of matching that. And we don't need the exact fractals and all that, but that was not as much time in the sub 6K realm as I thought at the time. It felt like much more back then.
It felt like longer. Yeah. My numbers are off because it felt, especially if you're glued to your screen and you're wrecked and you're hoping, because I remember buying 3.8K and then watching it go stay at 3K for ages. That was quite painful as well. Yeah. Or even 4.8. I bought that early.
Pulled up right there on the left.
Yeah, that's the one.
It's not as bad, but that last bit where we'd already made the lows, but then we were having $10 range days was I think where it was the most painful, and that's what finally established the move, right? You were bored to tears watching the market those days.
Good times.
And they were all up weeks, which is hilarious. February and March, that range right there. They were basically all up weeks, all no volatility. No one believed in that pump. Everyone thought so many people.
I did.
Well, I did too. I was highly convicted. I was already screaming my 200-week memes back then. And have continued to do so. Yeah. And that was the Pico bottom. Anyway, so we have a little more volatility this time for sure. So if we hit that no volatility multi-month period, that would be an interesting outcome, especially if other markets are going down at the same time,
Mm-hmm.
Nevertheless, I don't have a lot more. I think, can we just summarize as we head out, what we want to see next? We didn't really go down the pipeline of altcoins, but they all moved. I mean, I don't really know if there's a whole lot else to say.
Yeah. I mean, I have a few really good looking ones, but they're mostly at resistance. So it's kind of the interesting bit is that they could still be a good buy, right? Because I mean, if they break the resistance, it's going to go up 50% the next day, and people are going to be like, "Where is this coming from?" But yeah, it's pretty tough shilling a setup at resistance, especially if you're already sitting in it, because the moment you do, and it just completely runs away and kind of dies on you, you're the evil person that shilled their position at resistance while being in from lower. So don't necessarily want to be doing that.
There's probably a couple, and I'll do it on your behalf because whatever, why not? So Solana, to your point, some stuff has broken above this this prior high, whatever it was in mid-June, and they're up here now. kind of on just a relative chart basis. But look at Solana, Atom, several other coins. You can kind of pick your favorites. It doesn't really matter. They're all sitting here basically at this range high here, and they've done really well over the past several days. But if they break above that, the path to them to go another 50, 60, 100%, like, again, like the levels people don't talk about in that is, what if you get past this one and you go to this one? Like if Solana goes to $78, people are going to be pretty angry if they got capitulated at like 25, and that's a possible outcome. If this breaks the range, if this trend is strong, that's a possible bearish retest upside of $80.
Yeah.
And that's kind of the next thing. However, you could totally look at this and say, this is a range high. It's going to go back down and chop people up in the 30s again. And it's going to do so for weeks. None of us know the answer to that. I
don't think it's going to chop, honestly. I think it's going to go up. But
yeah, that's my positioning as well. It's just not a guarantee or anything. Like,
yeah, never a guarantee.
Yeah. So if we're sitting here saying, hey, we're at resistance, like, it doesn't make us bearish necessarily. It just means like this is not as good of a buy as it was a week ago.
Yeah. I mean, I shielded that for a reason, right? I mean, that's just how it works. And I mean, it's just kind of like how it always goes. Like, you shield something and then people are like, hey, you should be more careful with giving advice because this shit could go to zero. And then it's at resistance, and people are like, okay, what should I do now? I was like,
I actually think this is a reasonable way, and maybe Cred, you can talk about this some. And if it's not, then feel free not to. But like when you've talked about kind of your higher conviction trades, would this be the type where you'd rather enter this market at $43, $44 than you would have, down here?
Would I rather buy high than buy low? Is that what you're asking me?
Well, from a certain,
joking.
You know what I'm talking about. We've talked about this.
Yeah, of course. Yeah, I think it's worth bearing in mind the general principle that kind of a lower price isn't necessarily a guarantee of a better trade or a better entry in general, because it's more than just price. It's price structure. That's valid. In this case, what I would have loved, hideous failed breakout that the market then reclaims, and I can screw thing on my side. I don't know if can you see my BTC USD screen right now?
Yeah.
Okay, awesome. So for example, setups that I really like, especially because they tend to forming, is say you've got a level, right? And this is our level, and the market's come into it in the past, it's been resistance at some point, and then just created this hideous failed breakout market structure shifting move, and really, like with the passage of time or whatever else, it creeps back up to the level where that failed breakout occurred, but instead of acting as resistance like it did in the past, it actually reclaims the level above which that hideous failed breakout took place. And that tends to be one of my favorite type of long setups because it's a very good failed bearish setup. Under normal circumstances, once you have a level and you have a hideous fake out above it and it comes back, that's just as valid, if not stronger resistance than it was at first instance. So accordingly, when that setup fails and the market makes its way back above where some of the most awful price action originated, that tends to be a pretty clear entry signal that if they're not going to sell this thing here, probably not going to sell it anywhere,
Cred,
or at least much higher.
You're not sharing. I mean, I think
am I not? Can you not see that?
We cannot see the drawings.
Sorry, I can see that here. So you've got a level of resistance, for example. You can see this, right?
Yes, that we can.
Yeah. And the market comes in. It proves to you that there's some resistance there and whatever else, fine. And then the next instance that it comes into that level, it forms an absolutely vile type of failed breakout structure. Like, look, it looks amazing, and then you get completely rugged. Right. And then you're thinking, oh my God, this price action here is one of the most hideous things on the chart, whatever. And then with some passage of time, eventually the market, whatever, it's consolidation, and then it moves back up to the level where that hideous breakout originated. Right. And under normal circumstances, this is a really good, because you've got resistance, a failed break of that resistance, and it's resistance once again, and it tends to be a pretty good kind of continuation pattern to the downside. So one of my favorite kind of trend reversal setups to take is if the market doesn't find any resistance there and actually closes above it, trades above it, does whatever else, finds support there and whatnot. And that sequence tends to be really, really good for trend reversal, because if the level which at which there was the most awful breakout ever, or failed breakout in this case, doesn't act as resistance, then it's probably, that's not right. You know, if you're not going to find resistance here, you're probably not going to find it anywhere. So those types of structures where the kind of brutal part already took place, it's far less likely that you get a repeat of a failed break. And if it creeps back up there and closes, it's much higher likelihood of continuation. So to your Sol point, I would have liked a bit more of a meaningful poke through that range high you were mentioning, and then as a result going back above that area would suggest that whatever supply caused this hidden breakdown has sort of isn't there anymore, and then you go up. I think in general, breakout trading in these conditions is a bit tricky. I think Don touched on this point, which is that if you have existing positions at good prices, it's a good price to do nothing. But if you don't have an existing position, it's far less attractive for fresh positioning. That's sort of my view on where the market is right now. And in terms of when you mentioned summary or whatever else, what we're looking for, I think the only ingredient left before the case for me, like a meaty meat reversion, becomes far more compelling is I want Bitcoin to catch up. And doesn't need to outperform, doesn't need to do anything crazy, but you know, ETH quite compellingly broke out of its daily consolidation, daily structure, made a higher high, what have you. I want BTC to do the same, and I think the candles down to the candle structure, it's very similar where between BTC and ETH. So candle structure, range high, 20-week moving average, etc. I want to see BTC catch up, and I think that would be a pretty good signal for 2 to 4 or 5 weeks or whatever of uptrend or counter trend bounce, whatever you want to call it. I really think that's the only ingredient, especially if you're looking for the full picture. And there are pros and cons to that. As far as this week, I definitely want BTC to catch up because in the past, it's certainly been higher risk longs when the market is led by other stuff. And if BTC catches up later, fine, doesn't catch up at all, that's when you tend to run into some issues.
Yeah. Great. Don, anything to add before we go?
No, I actually agree. Like, I agree with all of that. I'm just in general just gonna not change anything. So for me, that nothing has to happen. Like if ETH, I think the one thing that can change my mind right now is if ETH loses the breakout. I would have to take profit, and would take profit on the entire market. So if we go back below 1.2K and start closing there, I'm gonna be running. And the cool thing is that's still 20% above my average entry for ETH, and I'm still going to make money on Solana. I'm still going to make money on a bunch of stuff in the market, which is like pretty nice. When that's like one of the reasons why I try to buy as low as I can, because sometimes your thesis is wrong, as in like my thesis, okay, the market is going to go to 28K for Bitcoin, but you still have like a really good buy. So the moment your thesis gets invalidated, you still make profit. So that's kind of like the one thing that I'm watching. I don't want to see 1.2K get lost. Everything else besides my target being hit, and my Solana target is $80 or $90 if it's weak, and 140-ish if it's strong. My ETH target is like, if it's really weak, 1.8K. If it's strong, like around 2.5 to 3K. And with Bitcoin, like I said, like in the 30K range. As long as we're holding these breakouts, I'm going to target those. And I'm just going to look, okay, is the market strong? Am I going to take profit early? Or am I going to take it late? So for me, nothing has to happen at all. I'm just going to stay positioned, not change anything until either of those hit. So either my targets or my kind of invalidation.
Is the ducks fund ledger? We're just swimming in
I
it.
know. His Solana targets put mine to absolute shame. Triple digit Sol is not on my radar.
That is completely burying me for my proposition of catch up. Apparently, I've been saying catch up, even though I don't think so. I tend to be pretty, but I'll take their word for it. And also, it's Cred coping because he's not positioned. His tears roll down my face. No, I'm not.
We'll leave it there. Thanks, everybody, for being here with us. We appreciate you. Hope you'll catch us next time on Weekly Open. And thanks for being here. Go to weeklyopen.com to check out episodes. Go to weeklyopen.com/FTX to trade this market. You can do so easily, directly from one asset to the other with zero fees. Track it on the app, DCA in, DCA out. Make the trades that you need to make. Do it all on FTX. weeklyopen.com/FTX. Thanks to them for being our partners. We'll catch you next time. Bye-bye.